So we go to currency trading, the one
Yes.
I don't like, but it is okay. Currency trading.
I'll break it down to two sections. I know the section that you don't like.
Yeah.
Currency trading is basically the buying and selling of currency. And on any given day, it's normal practice for such special funds to have that. And it has it on two aspects. One is funding. Being a global focusing fund, we may need to buy assets in another currency that's not Kenya shilling, because right now we are dealing with Oak Special Fund, which is a Kenya shilling denominated fund. So we usually receive deposits in Kenya shillings. So if we need, let me give an example, we need to buy a Eurobond, let's say a Eurobond. Eurobond is denominated by USD. We have first to buy the USD for us to be able to buy the Eurobond.
Yeah.
So it's part of currency trading. And if we sell the Eurobond and we need maybe to invest in something else that is Kenya shilling denominated, we have to sell the USD back to Kenya shilling. So that is one part of the currency trading. However, not just on instruments, we sometimes do what is called proprietary trading. We are looking at the various currencies and seeing opportunities. So we can choose, assuming you wanted to buy the Mexican peso. So you are buying the Mexican peso because you think it will gain against the Kenya shilling over time. Then you sell to make the difference. For that, sometimes you don't do just one-on-one trading. And we may use other platforms that will give something called leverage for us to make more with less capital. So on that, we've introduced something called CFD trading, currency for difference trading, or what is commonly known as contracts for difference. What is commonly known as online forex actually focuses on that. Yes, that is on currency trading. And just to say, it's some of the same mechanism that is used for what we trade on precious metals, because we may trade precious metals there and then we find people coming to rob our place thinking we have gold or we have silver. So on precious metals, we are not holding any precious metals in our offices, but we are basically looking at how do we trade on the underlying instrument is the metal, maybe the gold, the silver, copper, palladium, that's what is underlying. However, we are looking at how can we make money with the movements in the global markets of these metals. Okay. Yes.
Okay. Commodities?
Commodities. On commodities, we've still used the contracts for difference. So basically, at commodities, we are looking at things like oil. So on oil, globally, you usually have what we call US oil or WTI, and you also have the UK oil, so which is known as Brent crude. I'm sure majority of us have heard even on the business news, people discussing either Brent crude or WTI, which is the Western Texas intermediate oil in terms of prices. Also on commodities, we are able to access more than this. For today, keeping it simple, I wanted to mention what some people can be able to relate with, and leave it as easy
no
as
problem.
it is. Yes.
And then we've got ETFs, exchange traded funds.
Yes.
Maybe you can combine that with international equities.
Yes. Okay. For international equities, there are two ways of trading, but just the way we are able to buy what we call the local stocks. So you can buy Safaricom, you can buy ABSA, you can buy equity. The same way we've actually partnered with what we call counterparties to be able to buy the internationally recognized securities. Some of these are Alphabet, Amazon, now Alphabet is what is known as Google. There's Tesla, there's now, once you go to more sophisticated, you'll hear people discussing NVIDIA and others. So we are able to buy and sell, basically trade on international markets with our dealers, so that we can make sure that we are able to push or target our returns to 20%, as said. Yes. Still on ETFs, ETFs are actually structured funds whereby they combine several assets into a tradable instrument, let's say, so that you don't, if an exchange traded fund maybe is focused on technology and you think technology is going to gain over time, rather than go and choose individual stocks, you are able to buy an ETF that is focused on technology, and based on your analysis, you are able to move with it rather than drill down to each individual stock. Just the way I can give an example of, you can buy the NSE index, let's say. So you think maybe the stock market will do very well in Kenya. Instead of going to drill into each individual stock, you can choose to just buy the NSE index. The same way is how ETFs are traded. Yeah.
Okay, then sovereign bonds, those are just bonds that are issued. So government bonds issued by other countries other than Kenya?
Yes, true.
How do you access those?
We have right now at least majority of the financial institutions here are able to offer what we call a clearing house. And with that clearing house and both local and foreign counterparties, we are able to buy what are called sovereign bonds. Sovereign bonds may be from any country, from Egypt. I know you know the story about Ghana, what happened. Nigeria, and also UK gilts, and there is also what we call the US treasuries. They are able to price us, and right now with cutting of rates, there is what is called capital gains. Actually, that is the edge that has really helped majority of the people make money.
Awesome.
Yes.
Then we have derivatives. I know you've talked about derivatives already. I don't know if there's anything from the global markets perspective you want to share.
I would just like to add one thing. Why derivatives? Derivatives have been used to also help us manage our risk or our exposure. Remember that as we speak right now, we are discussing on Oak Special Fund, the Kenya Shilling Fund. So any asset that is not Kenya shilling and has been bought by any other currency suffers from what we call exposure. Exposure means that if the other currency moves up or down against Kenya shilling, that reflects to a gain or a loss on your inherent value of the fund. So what we do sometimes is, how do we protect? We try to protect the value by ensuring that the exposure, sorry, I'm using the technical term exposure, on the fund at any given time is at manageable levels. And let me just give an example. Assuming you have $2 million and $1 million is in Kenya shilling at 100. So you have 100 million and you have $1 million. And the exchange rate is 100. If for any reason, let's say the rate moves to 90, and so the valuation before was 200 million, 100 million, 100 million, that was the value of the fund. If the exchange rate goes down to 90, the $1 million, which was worth 100 million, has now moved to 90 million. So the valuation of the fund always moves down. If the rate moves up, the same thing happens. The valuation of the fund moves to 210 million. So we have to, as much as sometimes you can take advantage of that, you have to protect how much you have exposed, so that any small movement does not affect the fund drastically, and hence your investors.
Yeah.
Yes.
So it's like a risk management tool.
Yes, it's a risk management tool.
Awesome.
Always. Yes.
Okay. So I think I want to go into just the performance. So the other day, I met an investor who is considering putting money in, and they asked me, do you invest in Bitcoin? I was like, no, we don't invest in Bitcoin. And then I proceeded to explain about the fact that we have an investment policy document or statement that governs how we work, which is actually a requirement by CMA. I just want you to maybe to speak to that a little bit. And why don't we have Bitcoin, or why don't we have real estate, or other asset classes?
I like that question. First, I would want to say there are a lot of emotions in what people want to put in. And there are always opportunities in everything. Even selling cabbage might be an opportunity. So someone can come and tell you, can we just buy land and subdivide and then we sell? And there is an opportunity. But sometimes you have to focus in one area. And I say, you don't really have to put your eggs in different baskets. You can put in one basket and just ensure that you watch it. And that's what we do. So when we have what we call an investment committee, and the investment committee is properly constituted with a chairman and the members varying in different expertise. And what it does is it guides the way we invest. In the way we invest, not just the way we invest, it also looks into how much allocation is put in various investments and where is the trend going and how are the risks. So what happens is whatever we say are the asset classes are usually approved by the investment committee. That is one. Two, beyond the investment committee, there is the capital markets guideline on what we can invest and what we can't invest in. As at right now, and there have been several circulars around it, the Kenyan government, both central bank and CMA, have not given a they've actually said that the crypto market is not regularized as at now. Even other institutions that basically offer various instruments are not able to offer crypto as at right now. However, there have been several committees that are still discussing because crypto, whether regulated or not, it's still part of the Kenyan market. But I am sure with time, by next year, most likely, the capital markets will give a guideline, obviously assisted by central bank on that. And maybe we might decide to go into crypto. However, as much as I'm saying we may decide, as much as there are various instruments that one can get into, you have to also concentrate on your expertise as an institution. If you don't have a trader in crypto, as much as crypto is making money, you may choose not to get into it. Yes.
That's a very important point because even that's how we've divided the team. They focus on the different asset classes that they have experience and expertise in, which is so important.
Sure.
All right, we are continuing with breaking down our fact sheet for Oak Special Fund. And I want to now just give our fund overview.